Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to solve a question on single entry and incomplete records, the conversion method. And this question that we are going to solve is much complex than what we have ever solved on this channel. This question has a lot of tricks and hidden information, which if you are not careful and you meet such a question, it will be very difficult for you to bring out the information that you want. I know that I have given you steps to solve a question on incomplete records using the conversion method. Now, even though it's the same steps we are going to follow, this time around, we are going to use another means to deduce the sales and other things that we need in order to complete the solution of this question. And so I don't want to take much of your time. I want to move ahead and read this question so that we will all solve that together. Okay. Jane Smith, who retails wooden ornaments, has been so busy since she commenced business on 1st April 2015 that she has neglected to keep adequate accounting records. Jane's opening capital consisted of her life savings of $15,000, which she used to open a business bank account. The transactions in this bank account during the year ended 31st March 2016 have been summarized from the bank account as follows. So this is the details of the bank account. Receipts. Under receipts, we have loan from John Peacock, uncle, which is $10,000. We have takings, $42,000. Of course, we know that takings means sales. So that is sales into the bank directly. Then we have payments, purchase of goods for resale. So that is our purchases, $26,400. We have electricity for period to 31st December 2015, $760. Please be mindful of the dates, okay? We are saying this electricity is for the period to 31st December, but the accounting year ends 31st March 2016. So please take note of those ones because there could be some implications for accruals and prepayment here. Rent of premises for 15 months to 30th June 2016 is $3,500. I'm sure we are taking note of that date as well, that it ends 30th June for 15 months. Meanwhile, we are preparing accounts for 12 months. So there could be a prepayment over there. Rates of premises for the year ended 31st March 2016 to $1,200. We have wages and salaries of assistants, $14,700. Purchase of van on 1st October 2015, $7,600. Purchase of holiday caravan for Jane Smith's private use, that is $8,500. So that is for private use. Take note, that is drawings. Van license and insurance, payments covering a year, $250. According to the bank account, the balance in hand on 31st March 2016 was $4,090 in Jane Smith's favor. While the intention was to bank all takings intact, it now transpires that in addition to cash drawings, the following payments were made out of cash takings before banking. Okay, let me continue reading. I'll explain. So we have van running expenses, $890. Postages, stationery, and other sundry expenses, $355. Then we continue. On 31st March 2016, takings of $640 awaited banking. This was done on 1st April 2016. It has been discovered that amounts paid into the bank of $340 on 29th March 2016 were not credited to Jane's bank account until 2nd April 2016, and a check of $120 drawn on 28th March 2016 for purchases was not paid until 10th April 2016. Please, we have to really be mindful of the dates. I will come back to pick them one by one for you again, as I do all the time. The normal rate of gross profit on the goods sold by Jane Smith is 50% on sales. Please take note of that. The normal rate of gross profit on sales is 50%. However, during the year, a purchase of ornamental goldfish costing $600 proved to be unpopular with the customers, and therefore the entire inventory had to be sold at cost price. So we didn't make any profit on that. Interest at the rate of 5% per annum is payable on each anniversary of the loan from John Peacock on 1st January 2016. So let's take note on for the interest on loan. Depreciation is to be provided on the van on the straight line basis. It is estimated that the van will be disposed of after 5 years use for $100. So that is the scrap value. We continue. The inventory of goods for resale at 31st March 2016 has been valued at cost at $1,900. Accounts payables for purchases at 31st March 2016 amounted to $880, and electricity charges accrued due at the end and electricity charges accrued due at the date were $180. Finally, trade accounts receivable at 31st March 2016 totaled $2,300. So that is debtors closing balance at the end. Required. Prepare a statement of profit or loss for the year ending 31st March 2016 and a statement of financial position as at that date. So this question looks bulky, complex, and very technical. Now, we need to take our time and understand each point as they made in the information before we'll be able to analyze and then solve the question. As usual, I have given you the steps. You are not going to skip the steps, you will follow. But where we don't have information to complete a step, we may skip and then come back to complete it later when we have the information. Now, this question is actually testing a lot of your principles in accounting. You may have to deduce other things from other variables, and that is what we are going to do. And so I'm going to begin again, pick some items for you as I solve this question with you. Our task is to prepare a statement of profit or loss and a statement of financial position for the date, 31st March 2016. That is the end of the accounting year. And that is exactly what we are going to do. But we know that we cannot prepare the statement of profit or loss and the statement of financial position if we have not gone through certain workings. Remember, this is the conversion method. So I'm going to pick it again, like I said, discuss it point by point, try and understand the variables, and then we'll solve it together. Okay. All right, so back to the question. We are told again, Jane Smith, who retails wooden ornaments, has been so busy that she commenced business on 1st April 2015. So what I want you to understand that the start date of the business is 1st April 2016. 1st April, sorry, 2015. This is the start date of the business. And therefore, by implication, the accounting year ends 31st March 2016. So it means that if we are also preparing accounts for 31st March 2016, then this question is such that we are preparing accounts in the very first year of Jane Smith, who is the trader here. And it means that one thing you should know, that if you are preparing accounts for the very first year of business, it means there are no opening balances. Because opening balances are born from closing balances of the previous year. So once this is the first accounting year ever of the Jane Smith business, it means there are no opening balances for anything that we are going to prepare. There will be no balance brought down at all in this question. That is what you should first take note. Jane's opening capital consisted of her life savings of $15,000, which she used to open a business bank account. So we have already been given the opening capital. One of the things we used to do in solving incomplete records is that we prepare an opening statement of affairs to find the opening capital, which is going to be used to prepare the statement of financial position. Fortunately, we have been given the opening capital because this is the very first year of business. So there will be nothing like an opening statement of affairs in this solution that we are going to present. Okay, so $15,000 is the opening capital, and that is it. But that is not just it. We are also told it was used to open a business bank account. So in the bank account, there is an opening balance. You see that we have been giving receipts and payments here from the bank account, but we're not giving any, the 15,000 was not showing, and there is no closing balance showing. So we need to prepare a bank account again as workings, and then we are going to show the 15,000, not as a balance brought forward, but as capital. That is what I want you to take note, that because this is the first year of business, there will be no balance brought forward in the bank account. that 15,000 you see there will begin the bank account as the opening capital before all these receipts and payments will be shown, and then we'll try to estimate the closing balance of the bank for the purpose of preparing the statement of financial position. So that is the first working we are going to do. So let's continue. So we have been given a summary of the bank transactions. Receipts, there are two receipts we have here. Loan from John Peacock, Uncle, and then takings. Now take note that once you have this information, it makes your work easier, because when you are preparing the bank account, you just lift these items and then you put them into the bank account, except items that are not listed here, which you are going to deduce from the additional information. Okay, now these are two payments we see here, and loan and takings, and you know that takings means sales in this regard. So when you see takings, we're actually talking about sales. Okay, sales is called takings. Now that is then payments. We have purchase of goods for resale. Now purchase of goods for resale is simply purchases. Okay, so and that is purchases from the bank account. So that is somehow cash purchases. All right. And then electricity for the period 31st December 2015. Now, the accounting year is from 1st April to 31st March. So if electricity is to the period 31st December 2015, then it means that the last 3 months of the accounting year's electricity has not been reflected in the bank statement. So there will definitely be an electricity accrued or owing, because the business began on 1st April 2015. We have paid monthly electricity bills up to 31st December 2015. Nothing was said about payments from 1st January 2016 to 31st March 2016. So it means 3 months electricity has not been paid. Well, we have not been told about that, and the value, but we will definitely be told about that in the additional information. But I just want to draw your attention so that you know that the electricity here that has been paid in the bank account is not the electricity incurred for the year. Remember that I made mention of accruals and prepayment, that according to the accrual concept, you need expenses incurred, not expenses paid. We have actually paid to 31st December, but we are not going to pick only that for the financial statement. We need expenses incurred, and the expenses incurred will be a combination of what has been paid and the owings that have not been paid. So we are going to prepare an electricity account to be able to ascertain the electricity figure incurred to be taken to the statement of profit or loss. And that is what I want you to understand. Then also the next item in the bank payment is rent of premises for 15 months to 30th June 2016. In the same way, the rent that we have paid, we are told, is for 15 months. It can never be. According to the periodicity concept, financial statements are prepared for a 12-month calendar or a 12-month period. So once we have paid for 15 months, definitely there is an overpayment. And the 15 months we have paid is up to 30th June. So the accounting year ends 31st March, but we have paid till 30th June 2016. So in other words, there is an extra 3 months that makes up the 15 months. That extra 3 months payment will have to be deduced and taken off, because we are interested in what has been incurred, not what has been paid. We have overpaid. So when it comes to accruals and prepayment, whether we have overpaid or underpaid, we are only interested in what has been incurred for the 12-month period. So whatever has been overpaid for rent will be treated as a rent prepayment, and we'll know how to treat prepayment. So let's continue with the payments in the bank account. Now, we are also told rate of the premises for the year ended 31st March 2016 is 1,200. So nothing is wrong with that. It matches the date, the same accounting year. So there are no accruals or prepayments with rates. Then wages and salaries of assistants has been paid. We know how to treat wages and salaries. Once there, if there will be any adjustment on that, they will mention. If they don't mention, we assume that is exactly what has been incurred. Purchase of van, 1st October 2015, 7,006. So there was a capital expenditure here. We are told that the van was bought on 1st October 2015. Now the accounting year begins 1st April 2015. So it means that there is a capital expenditure we made and it was paid for in October. Meaning that definitely when you are calculating depreciation, we are going to respect the 1 month ownership basis, because the asset was not bought and used for the whole 12-month calendar period or whatever. So the accounting year is 12 months. but the asset was bought after some time. So when we are calculating depreciation, we are going to count the number of months in which the asset was used for the year, and then we are going to respect the timing of the month for our calculation of depreciation. Now, these things are things you are already aware. The question is quite complex. That is why I'm taking my time to break it down. Okay. The final two, purchase of holiday caravan for Jane Smith private use. Now, this is even nothing to even be worried about. Once we see the word private use, it is drawings. The owner or the proprietor has taken money to buy caravan for a private use. It has nothing to do with the business. So that $8,500 is going to be treated as drawings in the financial statement. Now, van license and insurance, payments covering a year, $250. So we have paid $250 for the van licensing, and we are told it covers a year. Now, please take note. The van was bought on 1st October. Now, from April to October is already 6 months. April, May, June, July, August, September, 6 months to 1st October. So 6 months of the business year was already elapsed before we bought the van. But the payment for the licensing was not covering only the 6 months remaining for the year. It covered the year, meaning that it's paid and it will enter into the next financial year. So if it begins from 1st October and we have made a payment of $250 to cover a year, then it means that there will be some prepayment in the licensing and the insurance for the van, and therefore we have to respect the timing. And then we are going to use only 6 months for this year, so there will be a prepayment for van license and insurance. Some of this information you need to see up to the level that we have gotten to now with this topic. I expect that your mind is up there. You are technical with me. Okay, you should understand some of these principles so that in analyzing some of these questions, you will not be in trouble, or your mind will not be lost as I explain some of these basic, even though they are basic, but they are very technical issues. Okay. Now, let's look at the rest quickly and then let's solve it. I don't want this video to be too long. Now, according to the bank account, the balance in hand on 31st March 2016 was $4,090 in Jane Smith's favor. Now, according to the bank, that is the bank statement, Jane Smith at the end of the year had $4,090. It doesn't mean that is exactly what you should have in your cash book. You see, there could be discrepancies. Okay, so this is just for information purposes. Now, while the intention was to bank all takings intact, it now transpires that in addition to cash drawings, the following payments were made out of takings before banking. Hold on with something. The plan was that all takings or sales should be banked instantly or intact, but it didn't go that way. And we are told that in addition to cash drawings, it means there was cash drawings and it is hidden in the question. You see that the drawings we have on the payments, under the payments in the bank account, was $8,500. That one was clearly mentioned that it was used to buy a caravan for Jane Smith's private use. Now, in this case, there is cash drawings which was not mentioned. It is hidden. It said that while the intention was to bank all takings intact, it now transpires that in addition to cash drawings, the following payments were made out of takings before banking. So there were some cash spendings. You see, the payments and receipt that I mentioned earlier was from check or bank. Now, there were also some cash spendings, and we are told there are some others. But in addition to that, there was also cash drawings, which we have not mentioned. And therefore, we need to also prepare a cash account. Remember that I taught you incomplete record and missing figures. And I taught you how to prepare a cash account. And when you cannot find the closing balance, or you are able to find your closing balance, and there is a difference on the credit side, we call it drawings. It is the same approach we are going to use. So we are going to prepare a cash account, and then the difference is going to be called drawings. Okay? But we need to first find our cash sales before we do that. And I'm going to explain to you. So in addition to cash drawings, the following payments were made out of takings before banking. So van running expenses of $890. Postages, stationery, and other expenses, $355. These two expenses were made out of cash, not from the bank. So we are going to prepare a cash account and a bank account as well. So take note. On 31st March 2016, takings, that is the last day of the year, takings of $640 awaited banking. This was done on 1st April 2016. Pause. We say we bank all takings. even the cash payments that was made out of takings before it was banked. Okay. But we are told at the end of the year, we had $640 in hand ready to be banked. And it was not banked until 1st April 2016, which is the beginning of the next financial year. Therefore, we are certain that at the end of the financial year, we have 640 cedis cash in hand. And that is what you should know. So that is the closing balance of cash that has been given in disguise. So once you are told 640 awaited banking, then that is your cash in hand. So please take note on that at the end. Okay, it means that the rest has been banked, but we are going to prepare a cash account to show this closing balance. It has also been discovered that amounts paid into the bank, $340 on 29th March 2016, were not credited to Jane's bank account until 2nd April. So 340 cedis has been paid into the bank. How was it paid? We know that any amount that is paid into the bank is takings, because we are told that we bank all takings. So $340 has been paid into the bank. It was not credited by the bank until the following financial year. We don't have any problem with the bank. We are preparing our own accounts in the books. And it doesn't mean we have to take it out of our cash book, because we have to record it on the debit side as a receipt into the bank, even though the bank is here to credit that. But the funny thing is that this 340 was not shown on the receipt and payment that was given in the question. So it means there was an omission of that, which we are going to put into the bank account. That 340 is part of our cash sales. So please take note of that. But it's yet to be credited by the bank. Then also, a check of 120 drawn on 28th March, which is in this financial year, for purchases was not paid until 10th April. That one, we have drawn the check, we have given to the creditors. Definitely it will go. The fact that we have drawn the check in this financial year means it has to be part of this financial year's account. And it was on 28th March, $120, and it was for purchases. And therefore, that will also constitute cash purchases. You can see from the bank accounts or the extract from the bank that we were given that there was purchase of goods for resale, 26,400. But this 120 has not been accounted for. So that will also be added to the cash purchases, or let's say purchases from the bank account. Please take note of that. Now, the other ones are very technical. The normal rate of gross profit on the goods sold by Jane Smith is 50% on sales. Now, we have to find our sales. We don't know our sales, but we are told that the normal rate of gross profit is 50% on sales. So it means that if we have cost of sales, the double is the total sales. Or whatever sales that we have, if we have sales of 1,000, then it means our cost of sales is 500. This is just the meaning. Because we are told that the gross profit is 50% of sales. So if your sales is 1,000, 50% of 1,000 will be 500. So that is basically that, okay? That whatever cost of sales you have, when you double it, it becomes your sales. That is the meaning. Because we know that cost of sales plus gross profit should add up to your sales. So that is the information we are told. That the normal rate of gross profit on goods sold by Jane Smith is 50% of sales. Then there was a clause. However, during the year, a purchase of ornamental goldfish of $600 proved to be unpopular with the customers, and therefore the entire inventory had to be sold at a cost price. Please take note. Whatever amount that we have, we double it and sell it. So if we buy the item for 100, we sell it for 200. That is the meaning of the clause of 50% sales as gross profit. If you buy it for 40, you sell it for 80. If you buy it for 10, you sell it for 20. Whatever that you have, the double becomes your total sales. So that in effect, profit will be 50% of the sales. That is the general implication here. But we are told that there is one ornamental goldfish, $600. When we bought it, the normal thing is that we should have sold this for $1,200. But because it became unpopular with the customers, we decided to sell it for the cost price of $600. So it means we didn't make any profit on that ornamental goldfish. So even though generally profit is 50% of sales, however, for this particular stock of fish, we didn't make any profit on it. So it's not part of the usual routine 50% sales that we make. And it's very important because we have to use a different way to find sales, which I'm going to teach you. Because there is no clear information on car sales. If you want to go and add the 4,002, the 340 and other sales information, you will still not get it right. So I'm going to teach you a different approach to get your sales. And that is what we are going to look at. And that means that this 600 will not be doubled to get the sales. So what we need to do in this question is that we are going to calculate our cost of sales. And when we have the cost of sales, we double it to get the sales. And when we have the sales, then I think we are good to go. We can take out the, as for credit sales, we can see it clearly. So when we calculate for credit sales, we take it out of the sales, and then we have our car sales. That is the problem. But don't really bother about the long explanations that I'm doing. All I'm trying to let you understand is that this 600, there was no profit on that. And when we are finding the sales, we are not going to double it. Because when we work for our cost of sales as workings, whatever cost of sales that we have, just double it and that will give you sales. That is the clear indication of what we have. So once the sales needs to be doubled from cost of sales, it will be easy as ABC. But because this 600 cedi will not be doubled, when we get there, we need to take note and not double that. Just take note of that. Okay. Now, however, okay, so please, let's look at the next thing. Interest at the rate of 5% per annum is payable on each anniversary of the loan from JPCOG. So that is just interest on loan. The interest on loan was made, the loan itself, sorry. The loan was made on 1st January 2016. That's what we are told. Interest on loan. Interest at the rate of 5% per annum is payable on each anniversary of the loan from John Peacock on 1st January 2016. So the loan was taken on 1st January 2016. So the loan is basically just 3 months in this financial year. We are going to apply the fractions. Now, depreciation is to be provided on the van on the straight line basis. It is estimated that the van will be disposed of after 5 years use for 100. So depreciation will be calculated, no problem with that. The van was purchased on 1st October, so we apply, and there is a scrap value of 100. Last but one information, or last but two, the inventory of goods for resale at 31st March 2016 has been valued at cost at 1,900. So that is it. Closing inventory. Accounts payable for purchases amounted to, at the end of the year, amounted to $880. So that is the closing value of your creditors account. And then electricity charges accrued due were 180. Remember that we spoke about electricity, that it was paid up to the end of 2015. And we have been giving the owings now. So for the 3 months that was not paid, it's 180. Sorry. So we can combine the accrued to the paid to get the incurred, and we'll do that with an account. Finally, trade accounts receivable, 31st March 2016, totaled $2,300. Required. Prepare a statement of profit or loss for the year ended 31st March 2016 and the statement of financial position as at that date. Okay. So we are solving this question together. Now, the first thing we have to do is to complete the bank account, of course. So John Smith. Let's prepare the bank account first. The currency is in dollars. Now, remember that there should have been a balance brought forward, but in this case, this is the first year of operations. I told you there will be no balance brought forward, but there was a capital that was used. So the $15,000 will be called capital. $15,000. So you see, in solving, if you call this balance brought forward, it will be marked wrong because it's capital. Then we can now copy the items that was given in the question. So we have loan from J. Peacock. So loan, J. Peacock. That was $10,000. And there was takings of $42,000. Now, in the question, even though this is the only takings, in the additional information, we are told that it has been discovered that amounts paid into the bank of $340 on 29 March were not credited to James' bank account. So there was also $340 of sales that was also not credited, and we didn't also show it in the receipt and payment that we made. So there was additional takings not credited of 340. What you can do is that you can decide to just write one takings, open a bracket and add these two figures and you show, and that is also acceptable. Okay, so this is how to go by the debit side. So I think there is nothing more to take. All we are doing is that we are recopying the receipt and payment given unto us. But we are not just copying blindly. We are also taking note of the items in the additional information. Then we come to the credit side. On the credit side, we have purchases first of $26,400. But also take note that in the additional information, there was additional purchases that we were told. Where we are talking about the sales, we are told that it has been, the first additional information, second sentence, it has been discovered that amounts paid into the bank of 340, which we just wrote, on 29th March were not credited to Jane's bank account until 2nd April 2016. And a check of 120 drawn on 28 March 2016 for purchases was not paid. So there is also purchases of $120, which was not also mentioned in the list of balances that we have. Okay, so we are also not going to copy blindly. So there are two purchases. The same way you can just write one purchase and then open a bracket for 26,400 plus the 120, or you can just do it separately. So purchases 26,400 is already given. Then there is an additional purchases that was not accounted for, 120. So you see that with the takings, there is an additional, which we pick from the additional information. And then the purchases too, there is an additional. And that is what I want you to understand. Okay. Then we move on. There was electricity of 760. We are just copying. 760. So the rest, we are just copying what we have. So electricity 750. 760, sorry. And then there is rent for premises. Please take note that when we come to the bank account, we are not going to factor any accruals and prepayment, because this is not a book for accruals and prepayment. So whatever figures you have there, regardless of the date, will be brought. So this is rent for 15 months, but we don't care. Then rates was also there for 1,200. And then also we have wages and salaries. Wages and salaries of assistants, 14,700. And then also we have a purchase of van on 1st October. Purchase of van on 1st October for 7,600. And then there was purchase of holiday van, which is drawings. Okay, purchase of holiday van. You can write it like that, or you can write the drawings also. So purchase of holiday van, which is drawings, the caravan, and the amount of drawings is 8,500. And then finally there is a van license. I told you we don't care about accruals and prepayment here, 250. So ladies and gentlemen, this is your bank account. There are only two new things I introduced. There's 340, because all these balances were given straight away. It's only this 340 I picked from additional information, and this 120 also that I picked. Okay, so that is it for the bank account. So we can just close off the bank account to get our total bank balance. Remember that we also have to prepare a cash account. So the total is 67,340. 67,340. So there is a difference, a balance carried down, which will be 4,310. All right, so this is the closing balance of the bank account. Okay, if you omit this and that, and you just repeat the same things, you may get some ticks right, but you are going to get the balance carried down wrong. And that is what you should note. All right. Now, if you remember the steps that I gave you in solving incomplete records, I told you that when the bank account is not closed, you close it yourself. Then the steps are that you estimate your total sales, which is a composition of the cash sales and the credit sales. Then you estimate your total purchases, and then you look for the expenses account and all those things. Now we are going to look at the estimation of the total sales, but there is something with the sales which will make it quite difficult to do. So let us begin with estimating the total purchases, because it's not in any particular order. So let's begin to estimate our total purchases. We know that total purchases is cash purchases and then credit purchases. So let's quickly look at our cash purchases. Cash purchases is already in the question. There is no other purchases. These two comprise your cash purchases. So this is working one. You can just say working two, estimation of cash purchases. And that is going to be the two purchases that we have there, which is 26,400, and there is another purchases for 120, which is going to give us 26,520. So the cash purchases is already stated in the question. Now let's look for the credit purchases. Credit purchases, we know we prepare a control account. And in this question, the only variable that we can use to prepare control account that we were given was the closing balance of payables at the end of the year. We are told in the additional information, last but one, that accounts payable for purchase at 31st March 2016, which is the last day of the year, amounted to 880. So all we need to do is to say working through, we prepare a creditors control account. Okay, so creditors control accounts, the currency in dollars, and then we are only giving the closing balance. And we know that the closing balance for creditors is on the balance carried down will be on the debit side and the brought down will be here. And so there will be a balance carried down of $880. And this is the only thing or the only information we have for the control account. So we can just close it off like that. We have 880, 880. And therefore the difference of 880 will be called credit purchases. I'm sure this shouldn't be a problem to do, or we have gone through this. If there were other information that would be in the creditors control account, would have brought all of them, and still the difference will be called credit purchases. So now that we have our credit purchases and our cash purchases, we can find our total purchases for Jane Smith. So working for total purchases, estimation of total purchases. So cash purchases is 26,520. Then credit purchases is 880. So your total purchases figure is 27,400. So this is how we arrive at our total purchases. I am sure this is not very confusing. We are moving step by step. Now we have to find the sales, and we know that for sales, it is still the credit sales and the cash sales that we combine. In this question, there is no clear statement of our cash sales. You can argue that, okay, we've mentioned the fact that, whatever sales you have in the bank account is the one, well, it's part of your cash sales. So you can just say these two are cash sales. But no, we realize that there are some other sales that we made drawings out of. We pay some expenses out before arriving at the sales. And that is why I have not prepared the cash account, because we cannot prepare cash accounts if you don't have the cash sales. Okay, so we are going to take a different approach to finding our total sales. And please watch what I'm going to do. Apart from this approach, if you try any other approach, your account will not balance. Okay, so please let's take note of this approach very well. We are going to find the sales this way. First of all, we can find credit sales because we have been given the closing balance of your receivables, just as we did for the payables. So we could have found the credit sales, but the cash sales is now the problem. And if you cannot find cash sales, even though you have credit sales, you cannot find total sales. So we are going to do a reverse working. We are going to rather find the total sales with a different approach. When we have the total sales, we can now convert and then find our cash sales by subtracting our credit sales, which we are going to find. And how are we going to find the total sales? We are told that total sales arrive at a gross profit of 50% on the sales. So we are going to first calculate our cost of sales. Then we double the figure to find sales, as easy as ABC. Because if gross cost of sales is 100, then sales is 200, according to the ideology. If cost of sales is 1,000, then sales is 2,000, except the 600 ornamental goldfish sales that was made at cost. All the others will be doubled. So look at the approach I'm going to take to find the sales for you. I'm cleaning the board and I'm going to take a different approach for you. So watch this. I'll say estimation of total sales. And look at how I'm going to go about this. We first have to find our cost of sales, like I told you before we do the double. Now, how do we find the cost of sales? It's your opening stock or opening inventory. You add your purchases, net purchases, of course, and then you take out the closing stock. But in this case, there are no opening stock because this is the first year of trading, like I told you. So we are going to begin straight away from purchases. Then we take out the closing stock. And for purchases, we have already gotten total purchases to be 27,400 from the working we just did. Okay, so it means if you don't estimate purchases, you cannot even find the sales. If your estimation of purchases is wrong, your cost of sales will be wrong and your sales will be wrong. This is a very tricky question. So, total purchases, we have 27,400. You take out closing stock or closing inventory. And according to the question, closing inventory is 1,900 from the additional information. 1,900. So, our cost of sales is going to be 25,500. Now, this is the cost of sales as easy as ABC. So the normal thing is that we are told that sales results in 50% of gross profit. So once we have 25,500, we should have just doubled this amount, and that gives us our total sales. And if you are doubling this amount, it's $51,000. So your sales should be $51,000 right from this. But there was another clause which we were told that, let's go back to that information. The normal rate of gross profit on the goods sold by Jane Smith is 50% on sales. However, during the year, a purchase of ornamental goldfish costing $600 proved to be unpopular with the customers, and therefore the entire inventory had to be sold at cost price. So even though this cost of sales, we need to double all of that, there is a 600 that was sold at cost price which cannot be doubled. And that means we have to take that 600 out before we double, and then we can add it back again to get its total sales. So what we need to do is that we less the ornamental fish stock, which was not sold at a profit, 600. So when we take that out of the cost of sales, we are going to have 24,900. And this 24,900 is a cost of goods that was sold at a profit. This wasn't sold at a profit. This is actually your cost of sales. But this 600 is inside the cost of sales, which was not sold at a profit. So we need to take that out and know the actual portion of cost of sales that was sold at profit. So portion of cost of sales sold at 50% profit. Or let's say it's 100%. But because we are looking at it from the sales side, okay? So now, since we know that this was sold at a double of the price to achieve 50% profit of sales, then what we have to do is that to get a total sales, we are going to do a double of this, and then we add back the 600. Because the 600 is also sales. The fact that we didn't sell it on credit doesn't mean it's not... The fact that we didn't sell it for profit doesn't mean it's not part of sales. So when we double this, we have sales. But the 600 was also sold. So it's also sold, sales. Just that there will be no profit element on that. And so you need to take note of this. This is a very technical approach. So to get your total sales, this is what you do. The goods that was sold for profit will be 24,900 times 2, because we are told that gross profit is 50% of sales. So 24,900 times 2 is going to give us 49,800, if I'm right. And once we have 49,800, we need to bring back this 600. Then we say goods sold at cost price or at no profit. That was 600. And so when we add 49,800 to the goods sold at cost price is going to give us 50,400. And ladies and gentlemen, this is the value of our total sales. So our total sales has been deduced as 50,400. Very, very interesting. Very interesting. I know some of your heads are cracking up, breaking off, but don't worry. Take your time and go over it again, repeat the video, and then get the analytics. Go through the question, you'll be fine. So this is how you arrive at your total sales. This is how you arrive at your total sales. Now, there is another way you could have found your total sales, okay? You could have just doubled this amount and then subtract your 600. That could have still given you. So what you'd have done is when you got here, you double this amount, it gives you 51,000. And when you have the 51,000, take out the 600 double, because the 600 has been doubled in it. So if you take the portion of the 600 out of the 51, 25,500 times 2 would have given us 51,000. Okay, then we less the profits that we have overstated, 600, and that would have still given us 5,400. So when you got here, you could have used this approach. I prefer to use this approach. So whichever approach you use, total sales should be 50,400. And that is it. So now that we have total sales to be 50,400, let us now find our credit sales. We cannot find the cash sales. It's very complex. So we find the credit sales, and then when we take credit sales out of total sales, it will give us cash sales. Then we can prepare our cash account. So how do we find the credit sales? We do that by preparing a debtors control account. Debtors control account. Now, in the question, we are told that the account receivable balance at the end of the year is 2,300. So there will be a balance carried down here of 2,300. And that is the only item in this question that is a control account item for the receivable. So definitely we just close it off and find the difference as credit sales. So 2,300, just as we did for creditors. So therefore our credit sales will be 2,300. So now that we have our credit sales to be 2,300, then let us find our cash sales. How do we find the cash sales? Total sales minus credit sales. So the next working will say estimation of cash sales. Estimation of cash sales. And therefore it will be total sales of 50,400 minus or less credit sales of 2,300. Our cash sales will be 48,100. So now that we have been able to establish our cash sales, we can proceed from here to prepare the cash account. Remember that I told you we still need to prepare a cash account and then the estimated drawings. You have been given a closing cash balance. And so we need this cash sales on the debit side of the cash account. Then we make all those cash expenses and then we put in the closing balance so that the difference can be called cash drawings. Because I told you there is a hidden figure of drawings. We are told that it's so technical. He says that in addition to drawings, the following were made out of cash. In addition to drawings, which drawings there was no mention of any figure. So this is the approach. So now we have gotten our cash sales. The next step is to prepare the cash account. And then from there, we'll do other adjustments and then we'll begin the income statement. Okay. So let's prepare our cash accounts. Now, in the cash account, the only debit item here will be cash sales. And that was what we were looking for. So the cash sales figure was just established as 48,100. Without that, we would not be able to prepare the cash account. So now that we have the cash sales figure, let us also look at the credit items, the payment. Now, we are told that while the intention was to bank all takings intact, it's now transpires that in addition to cash drawings, the following payments were made out of takings before banking. So those were made out of cash before banking. We have vehicle running expenses of 890, postage stationery to be 355. So vehicle running expenses 890, then postage, stationery, etc. That one is 355. Then there is something you should take note. You see that when we were preparing the bank account, we took takings of, there was a takings of 4,002, and there was also a takings of 340. Those monies were banked from cash, because those sales in the bank account has been banked. It was cash sent to bank. And because it's cash sent to bank, it will be a contra entry. So any sales that we send to the bank should first pass through the cash account as a contra entry. And that is what you should note. So we made these total sales, and then we banked some, and then we made payments out of some. That is what we are trying to say. And so let us look at the bank. There will be bank here. The first one will be 42,000, and the next one will be 340. Where am I getting this from? This is the takings in the bank account, because whatever sales we make, the policy is that we bank all takings. Okay, this is total cash sales we made, and these were banked, and these ones we made these expenses out of the cash before we banked them. So that is what you should know. So these expenses were made out of the cash sales, and we put this in the bank. So you cannot prepare your cash account without showing the contra entry, whereby you have debited the cash book with the cash sales. You need to debit, you have debited the bank account, sorry. So you need to credit the cash account to show the outflow from the cash and then inflow to the bank. We are not preparing a double column cash book. This would have been a contra entry. So you cannot prepare the cash account without showing the outflow from cash to bank of sales. And that is what we have just shown. The 42,000 was given to us already in the question, and the 340 was also sent to bank. Now, this is the only payment we are told that we made out of cash, and these ones are obvious. So we are done with the cash account. We could have just done a balance brought forward and then a balance carried down, and then we find the difference as the closing cash balance. But we have already been given a closing cash balance. Going to the question, we are told after the postage expenses that on 31st March 2016, takings of 640 awaited banking. This was done on 1st April 2016, which is the next year. So $640 awaited banking. You see, we are told the policy is that whatever cash sales they make, they bank. And we were also told they made these expenses before banking. So, and this is the ones they have banked. So the cash account is expected to run to zero. But we are told there is a closing balance of 640 in hand, which is yet to be banked. So your balance carried down is already given in the question as 640. So what you need to do is that you need to now find the total of the two sides. If you find a total and this side is exactly 48,100, then bingo, it means it's correct. But if you do a total and the total on the credit is less than the total of the debit, then it means there is a shortage. And the shortage, we call it drawings. That is why I've left a space, because we are told in addition to drawings, which drawings we don't know. So we are expecting to get a difference, and then we call it drawings. And therefore, we are going to have 48,100 here, 48,100 here. And when we add this all up, it's lower than that. So we find a difference and we put the difference here and we call it drawings. So you see, this is a mixture of incomplete records and missing figures together with the normal conversion method. So when we add up, we are getting a difference of 3,875. This is the difference that we need to make the two sides equal, and therefore we call it drawings. So that is cash drawings. The purchase of the caravan in the bank account was drawings made from the bank account. This is drawings made from cash. So that is the difference. I put DIFF as difference. So your cash account, ladies and gentlemen, has been prepared. The closing balance was already given. If there was no closing balance given, we could have added these two and it would be our balance carried down. But because we are given a closing balance, definitely the difference we need to make a balance is drawings. You can go back to my video, chapter 4, on incomplete records and missing figures to be able to understand how to find drawings as the difference on the cash account. Okay. So having been able to prepare the cash account, What we need to do now is to just find the accruals and prepayments accounts. So prepare electricity account. There was also some for rent. So prepare rent account, work out depreciation and interest on loan, and then we are done. So let's quickly prepare those ones. So electricity accounts. We're told from the question, from the bank account, that electricity for the period to 31st December, 760. So that is how much has been paid. And then we are also told in additional information, after accounts payable for purchases on 31st December was given, we are also told electricity charges accrued due at the end were was $180. Okay, and so there is only a closing prepayment. There is no opening balance. As I told you, this is the first day of the year of the business, first year of the business. So there will be a balance carried down here. This is where your closing owings will be, and it's 180. And then from the bank account, we are told the electricity paid is 760. So from bank. So once you have your bank 760 balance carried down to be 180, then we can close it off. And the total is 940, if I'm right. Okay, so therefore, the difference to the profit or loss or income statement will be 940. So ladies and gentlemen, this is actually the electricity incurred. We made this payment and this was owing. So the incurred is 940 for the profit or loss statement. We need also prepare one for rent account, because we are told rent was overpaid for 15 months. So it means there is a closing prepayment. According to the question, rent of premises for 15 months to 30th June was 3,500. So if 15 months is 3,500, we need to find for 12 months. Okay, so we can just use our fractions. So if it's 15 months, so 3 over 15 times 3,500 will give us, and that is going to give us 700 as the overpayment. So this is our rent prepayment, meaning the difference is 2,800. I mean, these are some of the things you need to know. So in other words, your bank, the rent you have paid in your bank account is 3,500. But there should be a balance carried down here, which is a closing prepayment of 700, which we just calculated. So if the closing prepayment is 700, then it means there is a difference of 2,008, which we can call profit or loss. And that is actually the rent incurred for the year. So you need to also go through this to be able to get that. Now we can calculate our depreciation, our interest on loan, and then we can begin with the work. All these are workings. All these are workings. You are not there to the main requirement yet. But the good news is that all these workings carry marks. Okay, so you need to do them well. Now let's calculate our depreciation on the motor van. We are told that there is a purchase of van on 1st October 2015, which was done 6 months after the beginning of the financial year. So it was used only 6 months in the business. So we respect the 1 month ownership basis in our calculation of depreciation. And the value is 7,600. We are also told in the additional information that it has a scrap value of $100. And therefore, depreciation of van using the straight line method, $7,600 minus the scrap value of $100 all over the useful life of 5 years. We were told, that was also given in the additional information, that it will be sold for $100 after it has been used for a period of 5 years. So this should have been the normal way we find our depreciation, but we need to multiply by 6 over 12 because it was bought and used only for 6 months of the 12 months financial year. So now what will be our total depreciation charge for the year? It's going to be $750. It's going to be $750. So this is how we arrive at our depreciation charge for the year, $750. And then finally, let's calculate the interest on loan. The loan was secured, according to the question, the loan was secured on 1st January. Interest at the rate of 5% per annum is payable on each anniversary of the loan from John Peacock. on 1st January 2016. So the loan was taken 1st January 2016, accounting year ends 31st March 2016. So we use the money in the accounting year for 3 months. So whatever interest on loan, we will be using 3/12 as a fraction to calculate. And we are told that it's 5% interest. So the last working interest on loan will be 5% times the loan amount. The loan amount is $10,000 times 3/12. So 5% of $10,000 times 3/12. And that is going to give us $125. $125. Okay, so that is it for now. Now, there is something else that I want you to draw your attention to. When it comes to the vehicle, go back to the bank. When we go back to the bank balance, the list of payments from bank, the last one says van license and insurance payments covering a year, 250. The van was paid for and used only 6 months. So if the insurance and whatever has been paid for 1 year, then we need to also find half of that as a prepayment. We need to be careful of that. When we are preparing the income statement or the statement of profit or loss, we will not forget to bring half as a prepayment. We'll subtract that, and that prepayment will go as a current asset in the statement of financial position. So I'll come back to that. So we can now prepare our statement of profit or loss and our statement of financial position. Okay. So we are preparing a statement of profit or loss or an income statement. So statement of profit or loss for the year ended 31st March 2016 for Jane Smith. Show your $sign, and then you begin with your sales. Now we are told from the question, or we calculated to find our sales, total sales to be 50,400. So straight away we put it there. There was no returns on sales. So we start with our cost of sales calculation, which we have already even done in workings. So our opening inventory, because this is the first year of operation, there is no opening inventory. So we start straight away from our net purchases. So with total purchases, we had 27,400 from our calculations. And then we take out our closing stock or closing inventory, which was 1,900. So when we take that out, we have a total cost of sales of 25,500. So when you take it out, your gross profit becomes 24,900. And that is it. So that becomes the gross profit. And this gross profit, we are told, should be 50% of the sales. 50% of sales. And we all know that we can even test it again. We can even test it again by saying 50% of 5,400 minus 600. Remember that there is 600 cost, that was no profit element. And when you do this, you are going to get 24,900. So just a test for you. It may not be too necessary, but just for you to know that the gross profit is exactly 50% of the sales, which we have already calculated. So having arrived at your gross profit, then there is no other income in this question. So we take out our expenses, operating expenses. And then let's be mindful of the expenses. Most of them will be taken from the bank payment side and from the cash. Okay, so we had wages and salaries of assistants. From the question, there was wages and salaries of assistants, which was 14,700. And then we prepared the rent account. Remember, we just prepared the rent account to ascertain the rent incurred, and that is 2,800. And then also we prepared an electricity account to determine electricity that is incurred, and that one we got 940. You can go back to check from the workings that we did. 940. And then in the bank account, there was rates. There was rate, and the figure for rate is 1,200, which is also an expense for the year. And then we have vehicle running expenses, which we prepared the cash book with. Those ones were made out of cash. Vehicle running expenses was 890. And then also there was postage, stationery, and sundries, which was also made out of cash. Postage, stationery, and sundries. And the total amount for that was $355. And then when we go into the bank account, there was van licensing insurance. And that was what I was explaining, that with the van licensing insurance, we are told it's paid for 1 year. Meanwhile, the van was bought and used for 6 months. So if it's paid for 1 year, then it means that 6 months, 6/12, only half will relate to this year. The amount for that is 250. And so half of 250 will be 125. But you can just show workings that van insurance, 250 was paid for minus 125, which will be a prepayment. So you have a final figure of 125 for your van insurance. So please take note of that. And then also, there are two expenses we worked at the end, the depreciation and the interest on loan. So in our working for interest on loan, we had 125, and then for depreciation of van, we had 750. So these are our total expenses. So you see, when you are able to go through the workings, the main work becomes very easier to present. So total expenses for the year will be 21,885. So we add all that, and then we have our net profits for the year to be 3,015. Net profit for the year is 3,015. So this is how to go by your statement of profit or loss. And then finally, we do the statement of financial position. Very, very easy. Let's prepare our statement of financial position. As at 31st March 2016. So we have 3 currency signs to show. So we start with our non-current assets. There was one non-current asset in this question. So we show the cost, the accumulated depreciation, and then the carrying amount or the net book value. So under the non-current asset, we had the van that was purchased. The value of the van at cost is 7,600, sorry. The van was purchased for 7,600. And then there was a depreciation for the year of 750. So the final balance of the van is 6,850. That is the net book value for the van. So we can just write off these two, and then we continue with our current assets. So you see, that is the only non-current asset we have in this question. In stock or inventory. So the inventory for the year was $1,900. And then there were some receivables at the end. So the receivables figure amounted to 2,300. And then there was a prepayment of rent. Remember, that is also part of receivables. So rent prepaid was 700 from the question. We made overpayment of rent. If you remember from the rent account that we prepared, this was a balance carried down, which I said is an overpayment. So it comes as a current asset. And then there was also van insurance prepaid. Remember that we bought the van for 6 months, but we paid for a year. So the overpayment will come as an asset. And this is how we treat the prepayment. This is what I subtracted the prepayment from the amount paid. So that 125 that was subtracted will still come here as a current asset, van insurance prepaid. And then we can now bring our bank and cash balance. So there was a closing balance at the bank, 4,310. Closing balance at the bank, 4,310. And then also there was a cash balance of 640 from the cash account that we prepared. So these are your list of current assets. So we add that up and we have 9,975 Ghana cedis for the total current assets. Then we can take out the current liabilities. We are going by the working capital way. So current liabilities. Current liabilities, remember we have trade payables from purchases. That is the creditor's closing balance. And from the question, it was 880. This is what we use to prepare the creditor's control account, if you remember. And then there is also electricity owings. Remember when we prepared the electricity account, just as we have brought rent prepayment, electricity owings or accrued or prepayment of 180 must also appear here. Remember this from the question. And then there was also an interest on loan. Remember, once it is not reflecting in the bank account or the cash account, it means payment for interest on loan has not been done. So this one, nobody will tell you that interest on loan is owing. Once you calculate interest on loan and it is not in your cash account or your bank account, it is still owing. So interest on loan is accrued. And the amount for that is 125. That is exactly what we had as incurred for the year. So when we add this up, we have 1,185 as the total current liabilities. So when we subtract current liabilities from the current assets, we get a working capital of 8,790. Yes, this is the working capital. So we add that to the total current, non-current asset, and we have a capital employed. A capital employed of 15,640. So this is the capital employed that we are supposed to have. So when we prepare our finance by, it should give us 15,640 as the total of the equity side. So permit me to clean this side so that I'll use that for the finance by. So we'll now see this current net asset or capital employed was financed by owner's equity and some liability. So we have capital. Now, fortunately, in this question, we didn't prepare any statement of affairs to ascertain the capital because it was given to us in the question as $15,000. So we didn't suffer on the capital. Then there were some drawings. We take out drawings. There were two sets of drawings in this question. If you could remember, there was a drawings in the bank account where we were told that the owner bought some caravan for private use. And then also when we prepared the cash account, the difference, we got some drawings. So we're going to combine those two drawings to get a total drawings. So drawings is going to be, from the bank account, the figure was 8,500 for the drawings. And then when we prepared the cash account, the drawings figure was 3,875, if you could remember. And therefore, total drawings is 12,375. We put that in bracket. So this is how you arrive at your drawings. Two drawings put together. And then we can add our net profit. So what is the net profit? We calculated our net profit, and then we had 3,015, if you remember. I know you have the record. So the net profit was 3,015. So total equity becomes 5,640. 5,640. And then we can add our long-term liability, which is the loan from J. Peacock. There was a loan from John Peacock. And according to the question, the value of the loan is $10,000. So therefore, when we add the loan to the owner's equity, we have 15,640. And ladies and gentlemen, it is the same as your capital employed. So it has balanced. The thing has balanced though. Anyway, don't mind me, I'm just teasing you. I know this question is very bulky. You can look at the length of the video. It's very detailed and it's a very long video. But if you took your time to watch to the end, I'm sure you will not regret. Take your time and repeat it again. These are some of the questions we can meet. Sometimes you think you have understood the topic so much, but when you get a very technical question, you will be found wanting. And that is why I personally decided, when I saw this question, I decided to solve it with you, so that at least you would have an idea of some of these questions, the way they can be presented. So this is it. It has balanced, and that is the way to go. If you have any question, let us get interactive. Leave your comments and let me know what you think. Remember to subscribe to this channel if it is your first time. Share this video, or if you are yet to subscribe, share this video. Let others also have a benefit. And until we meet again for another video, it's bye for now. Thank you.